Hello, Pam DuBois here with DMV Real Estate. We're so happy and excited that you've taken the time out to join us today. Real estate and what's going on in the DMV area, DC, Maryland, and Virginia. Well, we have a hot spring market right now, and basically properties are priced right, in good condition. They're going off of the market pretty quickly. So one of the things that we talk about is basically for the buyer to get pre-approved before actually going out and looking at homes. But we'll take it a step even further than that, is checking your credit reports, basically, and to see what's on your credit report. Sometimes you have errors on there, things that are not supposed to be on there, and it's a good idea to go ahead and get a copy of your credit report and check and see what's on there, and then you have time to dispute it before you actually go through the pre-approval process. Today I have with me Sandi Hawkes, and Sandi is basically going to talk to us a little bit about credit reports, how to get a copy of our credit report, and if there are any issues on our credit report, what we should do to take care of it. Sandi, first tell us how we would get a copy of our credit report.
Well, you can get a free credit report by going to annualcreditreport.com. That gives you your credit report score and an abbreviated version of your credit report. A better option is to go to myfico.com, which you will pay for it. But to get started, you need to go to annualcreditreport.com. As a realtor, one of the things that I find is that so many people do not have a good credit score for whatever reason. Maybe they don't pay attention to it, and they decide, oh, I want to buy a house or I want to rent an apartment. Well, you can't do either of those without a good credit score. Yes, you can get into a house with a lower credit score, but it's going to cost you hundreds and thousands of dollars. And who's got that kind of money to waste?
Right.
I know I don't, and I'm on a mission to help people understand their credit report prepare long before you start that home buying process. Figure out what's on there, what you need to fix, and go from there and work to improve it. It's always a good idea, even if you're not buying a house. Okay. Yeah, whether you're renting. Okay. There are over 67 million Americans that have poor credit. That's a pretty high number.
That is a pretty high number.
And that's not the number I want to be in, and that's not the number you want to be in, or anyone out there who is trying to buy a house, get a job. Especially in the financial services sector, rent an apartment, buy a car. Sure, there's plenty of places, like I said, that can give you credit, and it will cost you much more than that.
Higher, right?
Exactly.
So you pay for it in the long run.
70% of lenders really look at what the score that a person has. They want to make sure that you are handling your money, that you can take on more debt. Purchasing a home is pretty much the biggest financial investment that most people will make. So it makes sense to make sure that your credit is in a very good position. At least try starting 6 months. You've got to set goals. You've got to plan out, and lenders take a lot of different factors into account, not just your credit score, your income, any assets that you might have when they're looking to give you a pre-approval for a home, and the length of time that you've had these different credit trade lines. They want to make sure that you're a stable person, your employment history, all of those type of things.
Right. What do you see as a good credit report as far as the number, the FICO score? Well,
an excellent score is in the range of 750 to 850. Good is about 700 to 750. Then we go down to fair, which is 650 to about 700. And then poor is really anything but 500 and below, basically. And again, yes, you can get credit. But it's going to cost you dearly. And with the cost of living going up, especially in the DMV, you don't want to end up paying more money for a house than it's really, in terms of interest. It really pays to look at that. And to prepare yourself, say, like I said, 6 months out, look at your credit report. Give yourself time to find the inaccuracies, time for the credit bureaus to respond. You know, it takes time. It's going to be a process of about 30 to 45 days.
So let's say someone has a low credit report as far as a low score. What kind of advice would you give them as far as raising that score? What could they do to raise that score?
Well, first of all, again, pull that credit report.
Okay.
Then list it out. You want to evaluate what are the things that are negative on your credit report. Do you have any foreclosures? Any bankruptcies? Those are like number 1 and 2 in terms of what lenders, what the credit bureau looks at as negative things on your report.
Right.
Okay. You want to make sure that the time period has elapsed since that happened, or that you can explain the circumstances why this happened.
Yeah.
Because lenders are going to want to know what caused this. And is this going to happen again?
Right.
Nobody wants to go through that, but it does happen. It happens to a lot of people. We saw that happen, in 2007, and the mortgage meltdown. You know,
when everybody was basically giving loans to everybody.
Yeah, they were giving loans to anybody with a pulse.
Yeah.
Okay, but lenders today have stricter criteria, and you should hold yourself to a higher standard. That's how you should live your life. Yeah, I know it's tempting to go out there and, buy that new pair of shoes, charge it, or your friends are, saying, oh, let's go hang out and go to the club and whatever. But you're going to pay for that. You got to look at the big picture.
Yeah. You
got to say, I have a goal that I'm working towards.
Right.
Okay. I want to build wealth. I want to have assets.
Right.
And that fun time is just a memory.
Yeah.
A home builds memories. Okay, and more importantly, it builds wealth.
Right.
But there's baby steps you've got to take in order to do that. First thing, find out what it is. Identify those issues. Anything that's a discrepancy, write a letter. You have to send a certified return receipt letter to each credit bureau, because not all information gets reported to each credit bureau. One of the things that the Fair Credit Reporting Act has a legal loophole for your credit bureaus is if you go online and you dispute a particular item, they're going to say, well, they have the option to not notify you if if they want to change something, or if it's not valid. There is definitely, and anyone can look at the Fair Credit Reporting Act and see those provisions in there.
So they're not supposed to tell you? I guess not.
Those changes to that act made it possible that they do not have to notify you when you do online reporting to try to fix your credit report. That's why it is critical to take that extra step. Get a template to dispute whatever it is that the problem is. A lot of times people may have the same name. They might have a different middle initial
or something.
Or that social security number might be one digit off. And you could be inheriting somebody's bad credit and not even know it.
So it's important to check it.
There are people that have access to your information that you may not have access to.
So you definitely want to check that before you actually go into the beginning of the pre-approval process, because that's important. And as far as paying down debts and things like that.
That's why you need to start 6 months in advance to say, okay, what is it that I need to get no problems pre-approved by a lender? I don't want any blemishes. And if there are, then you got to figure out a payment plan to deal with how to get rid of that debt. Or a repayment plan, okay? And that's why it takes writing to the credit bureau, disputing things, making them validate the debt. You can't just assume that debt is always yours, okay? And if they can't prove it, then they have 30 days to respond to you. And they've got to get it off of your credit report. And it's one way that your credit score can go up.
Okay. So the best way to actually do it is to actually send something in writing. You're saying certified mail to the credit bureaus.
You want to make sure they got it, okay? And that clock starts from the time that they received it. So in terms of really fixing it, the process of getting those bad items off, it can take a little while. It can take a month or two, and you may have to go back and forth with them.
Okay.
But one thing I want to stress to people is don't use that online resolution process because it can backfire against you.
Really?
Yes.
Okay.
You want to go through the steps of writing it out.
Yeah.
I've got a program that can help people. They pre-made templates for just about any kind of situation, so that you don't have to think about what to say.
Okay, so you help them with the process of
Yes, I do.
Yeah.
Yes,
what to say, what to do.
Yes, my website is prosperitywithsandy.com.
Okay.
And your viewers can go out there and take a look. I have a free download for you. Just put your email address and name in there, and we can talk further. But it's very, very important. Things happen in life. We can't live without credit. America functions on credit.
Yeah,
okay,
very true. Yeah.
Our eventual goal is to be debt free. Sure, but you're going to need credit at different points in time in your life.
Right.
Okay.
Right.
For emergencies.
Yeah.
So you really need to focus on that. And say your kid needs something that comes up, you may have a big medical bill. You may need to do that. It's better to start an emergency fund.
Yeah.
But if you have to do that, then make sure that you are in a position where you can have access to that credit.
Okay.
Yeah. It's better to pay cash.
Right. and not everyone can do that. We all wish we could do that, but that's not something that we all
My
can do.
parents always stress, pay your bills on time and keep your debts low or non-existent.
Right.
But that was a different time, and they didn't have all of the fancy things that people buy today that they like to charge.
Yeah, don't owe anybody anything.
That's right.
Yeah,
right.
Makes total sense.
Oh no man anything but to love them.
Yeah, I like that. That's good.
Yeah.
One of the things I found in the past when I was in the lending business is not being told, like, a buyer would go out there and buy a brand new car, a couple weeks before closing, and all of a sudden now that debt is counted against them.
That is correct. And it could cause the transaction to not go through.
Yeah. You
do not, during that process of trying to identify and fix any issues, don't take on any major debt.
Yeah.
I understand in the
case... Or minor debts.
Right, right. In the case of, say, for example, you get in a car accident and you've got to buy a new car. That's unavoidable. Or if you have something, say you need to charge something that is really necessary. If you can't pay it off in 30 days, then you need to look at another way to come up with the money, because you don't want it to lower your credit score, because then it could just throw you right out the box, and then that has a ripple effect on you, on the people that you're buying the home from, because you got to start from scratch.
Right.
And so you got to closely monitor it and make sure that there's nothing else pops up on there.
Right.
Even the little debts that you may want to have. Little credit cards. Yeah. Pay those off. Do without something for a while.
Right.
Not the necessities.
What's all about what's priority for you and what you're actually
is this home is this home really important to you? Or is it more important, like I say, for that night out? Like, sure, that was fun, but the thing is that you got to look at the big picture. You want to have a home for your family. Who wants to live in an apartment where you don't know, crazy people can live next door to you? And things like fires happen.
Yeah.
That can happen anywhere, but the point is that it's something that's yours. You can decorate it as you please.
Right.
Okay.
You build equity. Basically, it's like putting money in the bank.
Sure,
so you definitely want to make that one of your biggest goals. Checking the credit report and making sure there aren't any issues on there. Sometimes the names, basically, like if you're a junior, you take on your dad's debt. The credit bureaus can get that mixed up. Basically, the names mixed up. So what was your dad's debt is now on your credit report.
Correct.
So you got to make sure and check that, which is
Yeah. One other tip that I would give for your viewers is that, say if you're new to establishing credit, you could really get an instant boost by asking to be an authorized user on someone's credit that, say for example, your parents, maybe a 20-something-year-old they need to establish credit. And what that means is that they would be added as an authorized user. They won't charge anything on that card that, say, their parent or friend who has good credit, but the good credit history will automatically boost their score by having that trade line on their credit report.
Okay, that's a good
that
point.
can boost their credit tremendously. Again, they're not going to charge anything.
Are they allowed to charge anything?
No, that's the agreement.
I don't know if I would want to do that. Yeah.
Right, and you don't want to create more problems than you've already got. But what it does, it's sort of like a covering, you know, and that way you can boost your own credit score depending upon your situation, and that's generally for, like I said, maybe somebody younger or someone who can trust, someone that they can trust that would do that for them.
Okay. That's a big thing. I mean, if someone actually would, give you authorization to be on.
No, you don't actually. You do not have the credit card, so you can't charge anything.
You can't do anything. Yeah.
But what it does is it puts you in a better financial position from the standpoint of the credit bureaus and potential lenders.
Yeah. Okay? Yeah, I know there's. I was actually talking with someone yesterday, a past client that was looking for 100% financing, and there are loans out there right now that they're offering 100% financing, and I don't know what credit score they need to be at. Do you, by any chance?
No, I don't, but I have lending partners who can really pull what they call a tri-merge report, okay, and that will really tell them what that person's credit score is and what they can get for that. It may be a lower amount. You may have to lower your expectations in terms of the house amount that you want to buy. That's another thing that low credit score, if you don't have one that's optimal, generally, yes, you can get in for 660, but you're not going to get a very good rate. They're really looking at 700.
Okay.
Yeah, 720. Okay. Then you get the competitive rates at what is currently in the market at 4% and below. But again, it all depends on your individual other circumstances. It varies by individual.
Yeah, okay. I plan on having a lender on here. We're kind of backed up for the next couple of weeks, but reaching out to some lenders basically to talk about the 100% financing and the different guidelines with that as far as a credit score. So stay tuned, to get some more information about that. So about the 6 months, I guess, basically in the repair work, can it be done any faster?
Yes, it can be.
Okay.
Okay, as I mentioned, getting added as an authorized user.
Yeah.
Really, you don't necessarily want to go that route unless you have to, but just pulling those credit reports, getting them, request them, get them in the mail, all three of them. Again, not every creditor reports to all three bureaus, okay? So you're going to have a different score with each one. It'll be off by a few numbers or percentage points, rather. So you want to get that. You want to outline, okay, what are the items that I know are not correct?
Yeah.
You want to write those letters, okay, and send them certified return receipt so that by law, if they can't prove that debt is yours, they've got to remove it. Okay,
and do they remove it indefinitely, or
no? That's permanently. That's permanently.
Okay.
As long as you have established that paper trail. Okay. I cannot stress enough the importance. Don't use the online dispute system because it can work against you. It works to the credit bureau's favor and to your creditors' favors, but not to yours.
Okay.
Okay.
But they can get their credit reports online.
That is correct.
Right?
Yes,
all
they can. Yes. You've got to go through a verification process. You've got to give them your name, your address, your social security number, and use your most current address.
Okay.
People move a lot, so you want to use that most current address that you have. And once they verify everything, then you're able to download it into a PDF through all three bureaus, and you want to pull all three bureau reports at the same time.
Okay. Now, do you have that information for us, like what sites they would actually go to get all three?
MyFICO.com is
one of them?
Yeah.
Okay.
AnnualCreditReport.com is the free one.
Okay.
Okay.
Now, does that give you all three?
Yes.
Okay.
Yes, but you have to specifically request all three.
And it is free. It's definitely free.
AnnualCreditReport.com is. MyFICO.com is not. but it gives you a more comprehensive picture.
MyFICO.com.
That's correct.
Okay.
Yes.
Okay.
Yes.
So when you're actually, so MyFICO.com is basically all three bureaus.
That's correct.
Okay.
Yeah.
Okay, and no charge.
Well, they do charge. It
They do
varies.
charge.
It
Okay.
varies.
Okay. Okay. Do you have an average of price?
Usually about $30.
Okay. Okay, that's
And
not too
it
bad.
can
To get a
go
copy of your
up.
credit report.
Depends on the options that you might want to pick. But I would not get yourself into a lot of monthly, getting set up on some kind of monthly charge with them because
They
they're
do
little.
have that. Yeah.
Yeah,
So
yeah,
they
it's-
monitor. Yeah.
Right. I have the company that I'm with has a credit monitoring system, a 750 credit monitoring system for $36 a year.
That's not bad. That's
Yeah,
pretty good,
these
yeah.
other credit monitoring services can charge you up to $40 a month to monitor it, and you can see any inaccuracies, things real time, because
The monthly fees.
right,
Yeah.
and
That's
a lot
fine.
of times your creditors are going to report things sometimes in a less than a 30-day window, so you want to make sure that you get that alert. Monitor
if something's
it.
going on.
Right,
Yeah.
right. Or if there's fraud, there's a lot of fraud going on today.
That's another good point. There is
Okay.
a lot of fraud going on.
So you
right
want to
now,
make
yeah.
sure that people are not using your credit cards erroneously. Hopefully you know it by that time.
Yeah.
But it's a nightmare for many people to have to unravel all of that mess.
Right. So yeah, even if you're not basically, in the process of buying a house or thinking about buying a house, this is very important information. You can actually, check out your credit report. It's pretty important to keep up with it because there is a lot of fraud going on out there. So that's a good point.
Right.
Yeah.
Right. There's a lot of scammers.
Yeah.
A lot of people. It's easy money to people, but it's hard for you to earn it.
Right.
And you don't want your reputation destroyed.
Right.
So you need to be as vigilant about that as you are about your children. Okay.
That's a good point too. About your children, yeah.
Right.
Okay.
Right.
So it can be done faster, as far as I guess the 6 months.
Yeah. Oh yeah. Well, I'm only suggesting 6 months to give yourself plenty of time to make sure that you get the responses back from the credit bureaus, and to see progress month to month. It can be done it can be improved in as little as 30 to 60 days, depending upon how quickly they remove those negative items from your credit report. Another thing that I've learned is that when you go to credit counseling agencies and they consolidate your debt, that can sometimes be viewed as a negative.
Oh, really?
Yes, yes. You have to be careful. I mean, if that's an option that someone might
I think the
choose.
lenders look at it negatively.
Yeah, the lenders definitely look at it negatively.
Yeah.
So you want to fix it, work it out yourself, see what the options are. Everybody knows their situation, and if you don't, then this is a great place to start. Again, as you pointed out, whether you're looking to buy a home or not, you need to know your numbers.
You need to know
okay?
what's on your report.
Right.
Yeah,
right.
it's very important.
Yes.
Yeah. Any other good tips that you can give us on credit reports?
I would just say that people should keep on top of their debts, try to eliminate them, and strive towards wealth building. And having a lot of debt is not helping you to build wealth. But I certainly can help people in terms of that. So I certainly, I can be reached at 301-367-2135. My name is Sandi Hawkes, and I'd be glad to help you to explore the options. We have some wealth building strategies that will really take your life to another level.
Okay. Yeah, that's great. Yeah.
Yes.
One of the other things too is if you have credit cards, staying away from the high balance as far as the credit cards, because that actually will lower your credit score. So you want to stay clear away from the high balance of it. So if you have $1,000, let's say, credit max, and the amount you owe is like $900, that will affect your credit score.
Right. Lenders look at the one of the biggest impacts, about 30 to 35% of the impact is the utilization on your lines of credit, whatever they are. They look at that and they say, well, they're maxed out. How can they handle any more debt?
Right.
Especially a mortgage. Okay.
Right.
or even a smaller line of credit. So you want to make sure, like I said, look at your finances and see where you can cut out stuff and pay down and pay off those debts, and don't get in debt again.
Stay away from getting
yes,
debt.
we need it.
That's a good point. Yeah.
But there's ways to fix it. But let's keep it to a minimum and get rid of it.
Right.
Okay.
And sometimes you actually have people that they're trying to buy and they have no debt, so there's nothing on their credit report at all, basically, because they're just starting off.
Right.
There's nothing on their credit report, so you actually have to build credit.
Yes, you do. Yeah, those trade lines are important in terms of you could get a prepaid card where you put, say, maybe $200 or $500 on it, and the key is paying it back on time every month. That's what they're looking at. Are you paying your obligations?
Right. Are you being responsible?
You may skip out on your friends, but you're not going to beat the creditors, okay? Right. They're going to hold it against you, all right?
Yeah, it comes back to haunt you.
Prepaid cards are a great way to establish or reestablish your credit. And that's a process that takes a few months, say a 3-month window. So I would say within a 3-month time frame, you should have definitely improved your score.
And what about negative credit? Let's say they actually do have like 30-day lates or 60-day lates on there, basically. How long does it take, as far as dropping off? Does it actually drop off once, after a couple of years, if they're back on time paying?
It has a lower rating over time, okay? The thing is to show a consistent pattern of paying it on time. When you start doing that, then it goes up by increments, okay? And those older late payments go to the bottom in terms of ranking.
Oh, okay.
Yeah.
Well, that's good to know.
Yeah.
That's good to know, basically.
Yeah.
So you don't have to worry about it. Like maybe after a couple of years it goes down? Or?
Yeah, it never necessarily goes away, but it goes
away.
Yeah.
Okay.
And one of the things I want to point out is annualcreditreport.com generally shows about 2 years of history.
Okay.
Okay, whereas myfico.com will show a longer trend of your history. Okay. So, sometimes you got to pay for it,
but
you
that
need to
plays more
start.
Into the, it affects the score more if it's on there longer, right?
Well, no, it depends upon what the type of debt is. If it's a small credit card where they had delinquencies, that doesn't have as high a weight as an auto loan or medical bills, high medical bills.
Student loans.
Well, those are pretty high up there, in terms of ranking. Yeah, and there's so many younger people that are in debt, and they've had to fight with the different agencies that they've got their loans through, and so it almost seems hopeless. It's not hopeless, but there's a lot of programs that can help you to get rid of that, or to certainly pay it down.
Okay.
Yeah.
Well, this was great information. We thank Sandi so much for being with us today. Hopefully you got some good information to help you in the home buying process, and even if you're not in the home buying process, basically just getting some information to check out your credit report and make sure that it is correct. We're here again next week, Wednesday, from 1:30 to 2 o'clock. Meanwhile, we're actually going to be on Facebook. I spoke with an appraiser. We're going to have some information from appraiser's point of view for you. So please keep us on your Facebook Live. Please like us and comment. If you have any questions, we're here to answer your question. Hopefully you have an awesome day. Well, have an awesome day, and we'll talk to you soon. We'll see you back here soon. Bye-bye.
Thank you, Pam.
You're welcome. Thank you, Sandi.
Okay.